The Fed highly increases interest rates due to which crash happened in crypto market. Hi, I am CryptoUs and today we will discuss that.
So let's start.
Bitcoin fell on Thursday morning, trading in Asia, dropping below 25,000 at one stage for the first time since mid-March. Ether also retreated with other top 10 non-stablecoin cryptocurrencies as trading volumes dipped in the US. The Fed left interest rates unchanged as expected, but warned of more hikes this year to tackle inflation. Ripple's XRP token fell despite the release of documents this week that were expected to help the company's defense in an SEC lawsuit. The two tokens have been on a downtrend since being named in the SEC's lawsuit filed last week against the Binance US and Coinbase exchanges, where the federal agency categorized the two along with many other altcoins as financial securities. It's been predominantly the altcoins that have been dropping. BTC to some extent and ETH as well have been holding up better, and that I think is mostly attributable to the fact that the SEC named a lot of altcoin as securities, and that has this chilling effect. The U.S. Federal Reserve left interest rates unchanged as expected on Wednesday at 5% to 5.25% after 10 consecutive hikes to curb inflation. But in another negative for investors, Fed Chair Jerome Powell said it may take years to get inflation under control, dousing expectations for rate cuts later this year and raising the likelihood of higher interest rates. Ripple's XRP token led the losers in the crypto top 10 by market capitalization, falling 7.48% to 0.4793 on the day for a weekly loss of 7.19%. The declines came despite the release of the so-called Hinman documents this week, a collection of previously sealed emails and pages from former U.S. Securities and Exchange Commission Director William Hinman. The notes indicate that Ether should not be categorized as a financial security. Ripple Labs was sued by the SEC in December 2020 on allegations XRP was sold as an illegal unregistered security. Ripple wanted the Hinman documents made public, arguing they show the SEC itself was sending mixed and confused signals over whether cryptocurrencies were securities and failing to offer clear guidance to the industry. Ripple's XRP token led the losers in the crypto top 10 by market capitalization, falling 7.48% to 0.4793 on the day for a weekly loss of 7.19%. The declines came despite the release of the so-called Hinman documents this week, a collection of previously sealed emails and pages from former U.S. Securities and Exchange Commission Director William Hinman. The notes indicate that Ether should not be categorized as a financial security. Ripple Labs was sued by the SEC in December 2020 on allegations XRP was sold as an illegal unregistered security. Ripple wanted the Hinman documents made public, arguing they show the SEC itself was sending mixed and confused signals over whether cryptocurrencies were securities and failing to offer clear guidance to the industry, which is part of Ripple's fair notice defense in the case. However, XRP's price hasn't benefited from the release of the documents. Gabriel Shapiro, a U.S.-based attorney and the general counsel at blockchain firm Delphi Labs, wrote on Twitter Tuesday that Hinman emails are a nothing burger though great for Ether. No idea why Ripple thinks these emails help Ripple's case. Shapiro added that the documents were not the bombshell compared to the huge hype given to them. In the NFT market, the Forecast 500 NFT index lost 0.86% to 2,912.74 in the 24 hours to 7:30 a.m. Total NFT transactions rose 0.13% to 23.7 million, while sales on Ethereum, the leading blockchain by volume, fell 4.78% over the last 24 hours to 13.52 million. The Bitcoin network was the second largest NFT network in terms of transactions, rising 6.95% to 4.1 million in the last 24 hours. NFT strategist at Forecast Labs, the parent company of Forecast News, is the latest NFT standard for the Ethereum network that went into effect on May 7 this year. About 196 million of Blur tokens worth around 62 million, 40% of the circulating supply, are being unlocked and distributed to investors and contributors on Wednesday. Blur is the native utility and governance tokens of the Blur NFT marketplace. This will almost definitely cause a crash in price, which will impact NFT prices. Transactions of uncategorized ordinals, unique digital assets on the Bitcoin network that are not identified as part of one established collection, topped sales by collection, and selling 3.14 million in the last 24 hours. Ethereum-based Boring Punks marked second with 1.63 million in sales with over 20,000 transactions in the past day. The U.S. central bank left interest rates unchanged at 5% to 5.25% after its meeting on Wednesday. The rate is at its highest since 2006 after 10 consecutive hikes that started in March 2022 to slow the pace of inflation that surged to 40-year highs at one stage last year. However, post-meeting comments from Powell hinted at 2 more rate hikes by the end of this year while stating that rate cuts will not happen unless inflation is under control. That didn't go down well with some business leaders. The battle against inflation is being won. This is now the time for the Fed to stop, not pause interest rate hikes. The time lag for monetary policies is notoriously long. It typically takes about 18 months to 2 years for the full effect of rate hikes to filter fully into the economy. That excessive rate hikes could lead to a recession in the U.S. The next Federal Open Market Committee meeting is scheduled for July 25 to 26. But what can investors expect from here, and how long will the rate environment impact markets? While the Fed has already raised rates 10 times during this tightening cycle, it's easy to spot when markets really sit up and take notice that the central bank wasn't kidding that it was about to recalibrate monetary policy. It was November 2021 when cryptocurrency and many of the riskiest stocks peaked. But higher rates seem to be frightening investors less these days as they anticipate the future path of interest rates may be peaking. But with the better-than-expected recent inflation numbers, the Fed and investors feel like they have some control on inflation. It seems now everyone sees a path to an eventual holding off of rate hikes. Cryptocurrency prices have plummeted along with other risky assets. Many commodities spiked higher in early 2022, but many of those moves proved short-lived. With rising rates expected to slow or stop, crypto seems to have found some support. Whether that's inflation, low interest rates, lack of purchasing power, devaluation of the dollar, and so on. Those positives were easy to believe in as long as crypto was rising seemingly regardless of other assets. Higher rates generally lower appetite for riskier investments, and that is likely one of the causes for a significant pullback in digital asset prices over the last year. The future of crypto in 2023 is going to be driven by how much appetite for risk exists among the investor community. Right now, the market does not seem to have that appetite. Rising rates, high inflation, and uncertainty all create a stew of volatility for investors. With so much volatility, investors may want to trade cautiously. According to reports, the best way for most investors to approach this type of market is to stick to the long-term game plan. For many, the long-term plan means continuing to invest regularly. For others, the game plan may involve buying and holding. While short-term traders may be sweating rising rates and trying to time a recession, it's vital to keep things in perspective. Instead of trying to find the right time to sell, buy and hold, investors can use the market's volatility to their advantage and then try to find the right time to add more. Now it's a time for good news. The grand old party continues to fight on the side of the crypto industry. On Tuesday, House Financial Services Committee Republicans asked the U.S. Securities and Exchange Commission to rescind its proposed rule to change the definition of exchange. In the letter, the group of lawmakers said the SEC's proposed rule will stifle innovation and harm digital asset market participants and the U.S. economy more broadly. The rule change, first proposed by the SEC last year, would redefine the term exchange within the Securities Exchange Act to include systems that offer the use of non-firm trading interest and communications protocols to bring together buyers and sellers of securities. Republican lawmakers argue in the letter that this definition exceeds the SEC's powers and would shut down the development of the digital asset ecosystem and continue to stagnate U.S. technological innovation. It is not the first time Republicans have blasted the SEC for its apparent aggression against the digital asset industry. Republican SEC Commissioner has previously said that the SEC's demonstrated position sends a message that we are uninterested in facilitating innovation and competition in the financial markets and instead seeks to protect incumbents. And just last month, Republican lawmakers said in a different letter that SEC Chair Gary Gensler was forcing the digital assets ecosystem into an improper regulatory framework. The SEC has gone after a number of major crypto brands this year. Kraken, Coinbase, Gemini, Binance, and Binance US have all been hit with lawsuits. SEC Chair Gary Gensler appears to be cracking down on all the coins and tokens he believes are unregistered securities, and his agency has charged a number of digital asset companies as a result. The top regulator has even hinted that the digital asset industry may not be welcome on U.S. shores at all, saying last week that we don't need more digital currency and adding that the current industry was built on non-compliance. This harsh stance has been criticized by lawmakers who argue that the regulator is overstepping its mark, and by crypto companies who are now eyeing up other countries to do business. Some U.S. lawmakers and crypto advocacy groups, including the Blockchain Association, have also criticized the SEC proposal, claiming the rule change would allow the Commission to exceed its authority and expand its purview to a range of financial products not equipped to handle such regulatory requirements. According to the Coinbase chief legal officer, there was a path forward with the proposed rule change requiring robust consideration of the profound differences between a DEX and a traditional exchange. Coinbase comments came amid the SEC being at the forefront of attention in the U.S. concerning the regulation of cryptocurrency. The Commission has filed separate lawsuits against Binance and Coinbase for alleged violations of securities laws, prompting backlash from lawmakers calling for SEC Chair Gary Gensler's removal. Prior to the SEC lawsuit but following a Wells notice suggesting a potential enforcement action, Coinbase filed a reply in support of its July 2022 petition for a writ of mandamus in an attempt to force the Commission to provide regulatory clarity for firms seeking to register. I hope you find this video knowledge. That's it for today. So please don't forget to like, share and subscribe.